The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the April 26th, terrific Thursday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that is to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648. If you can't dial in, you can always send me an email. Love to get those emails, steve@tfnn.com. Just please, inside that subject heading, put radio show question. Makes it so easy for me to distinguish your important email from all the junk that you and I seem to get into our inbox out there. Of course, if you're in the Tigers Den, well, any ping will do. So let's go ahead and get this show started on Terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow up 234 points. She's trading out at 24,318. S&P up 26 points. 2665 is the number. The NASDAQ 100 up nearly 2%. That's 127 points. The upside, 6641. So you've got all the indices with the exception of the transports trading to the upside. Trainings are down 118 points. That's a little over 1%. Spot volatility index down 6%. Trading out at 1678. Gold off $4. Silver down 3 pennies. Light sweet crude is flat. Leading the charge to the upside dollar-wise, it is Chipotle up 82 buckaroonies. Ooh, that is a move. That's up 24%. Amazon up 47, a little over 3%. Booking Holdings up 34 bucks, 1.5%. O'Reilly Automotive. I remember we were looking at O'Reilly Automotive with one of the callers out there. Can't recall who and what we were looking at, but it's up 11%. That's 25 bucks and change. Google's up 20 to the downside. It's a Tree, lendingtree.com, down 42 bucks or 14%. That's a stinger. Spectrum Brands down 22%. That's even worse. That's down 21 bucks. Annixter International. Annixter, yeah, I think that may be how it's Axe Capital. How about that? Down 17 bucks and change. That's 22%. We certainly have things to look at to the upside and to the downside, but I want to look at what you want to look at. The first question that came in very early this morning, didn't get a name on the email, just an email, and that's fine. But the email asked if I believed in, the word was believed, if I believed in the McClellan oscillator. And the reason was because this listener, viewer, had read an email, sent me the link to the email. I didn't get a chance to read it, but sent me a link to the email that said that now the McClellan oscillator was developed by Sherman and Miriam McClellan. And most people know of Tom, their son, and so he's taken the reins. Although Miriam passed away years ago, Sherman is still around, and every now and then I hear him do an interview. And you know that we use that set of tools out there inside the New York Stock Exchange, inside the NASDAQ Composite, inside of the Dow. We use the advanced decline information. That is, it's really what the McClellan, well, here, let's do this. What's the McClellan oscillator doing? If we take, this is a chart that you guys are familiar with. Got the New York Stock Exchange on the left, NASDAQ Composite next to it. Then you've got the Dow and you've got the S&P 500. So I only get through the e-signal platform, the advanced decline data for these three indices. Unfortunately, I wish I had it for the S&P and had it for all of the ETFs and everything else, because then we could use the advanced decline oscillator. That's really what this individual was referring to. This is what they're truly noted for. And you take a look at the advanced decline information, and you're putting an oscillator. What's an oscillator? Oscillator is the difference between two moving parts out here. In this case here, we're using the two moving parts as two exponential moving averages. The moving average levels that Sherman and Miriam decided upon wasn't initially what they were using, but what they finally decided upon was 19 and 39. Now, they decided on those levels because that was based upon the work of Peter Harlan. When we say this isn't rocket science, that's not correct. This is rocket science, because Peter Harlan was, in essence, a rocket scientist, and he was the one individual at a point in time. Of course, he had a bunch of people working for him, but he was the individual back in the 60s responsible for making sure for making adjustments to the satellites that were up there. Now there's a lot of traffic compared to back then, to make sure that they were in the proper spots. And what he used, he called them trends. 1%, 5%, 10%. You can use all these things. What they correlate to is what we now know of as the exponential. Not simple, but the exponential moving averages. They worked really well back then. Guess what? They work really well now. Now, with regard to how do you interpret the advanced decline oscillator reading, so you're trying to identify market breadth. There's a number of ways for you and I to be able to identify market breadth. When we just take a look at advanced decline information, we're looking at the very bottom panel of our screen. The simple meaning is that if it is below zero, sellers are the ones that are in control. If you take a look now, above that is the summation line. Summation line is adding up all the previous, so you're taking yesterday's, adding to the accumulative total out there. It's nice because for those of you that are visual, all you have to do is look at that second panel on my screen and see if it's red or green. If it's red, it tells you the advanced decline oscillator is below zero. If it's green, it tells you it's above zero. It's as simple as that. If we take a look at the NASDAQ composite now, you can see that it is ticked green for the day as we speak right now. That says that buyers are in control. Of course, if it turned red tomorrow, if it closed like this and it turned red tomorrow, what it does is it tells you, well, it was a fumble. Buyers really never were in control. It was the sellers. It looks to me like the Dow may have its second day in the above zero, so buyers are the ones in control. New York Stock Exchange, slightly below zero. The reason that this individual wrote in was, I have to surmise here, was do you believe in it? Because must know that, listen to the show, must know that I use it. If you believe in it, how come you haven't taken Tom McClellan's all-out bearish view, apparently? And I don't know that to be a fact. That's just what this individual wrote. I'm going to assume that that's included in the article there. Through whatever time. So I don't believe that Tom took the viewpoint. Let's assume that he is bearish out here. That his bearish viewpoint is based upon the McClellan oscillator. There's something else that you and I use out here, and we take a look at all the time, and that's called the price oscillator. Now, that is looking at the difference between the 19 and 39-day exponential moving average of price. Price oscillator different than the McClellan oscillator. So when we come back from this break, let's go take a look at the price oscillator for the New York Stock Exchange or the S&P 500. Let me go look at that email, and I'll figure out which one it was he was referring to. Steve Rhodes with TFNN. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. So we're trying to answer a question here from a listener. I'm going to turn away from the camera for a moment just to read it because it's on one of my other computers. Hey, Steve, do you believe in the McClellan oscillator? McClellan came out with a bearish call on the market based on his oscillator that is supposed to last until August. Now, I don't know if the oscillator is supposed to last till August, but I'll go with the bearish call lasting to August. I doubt it's because of the McClellan oscillator out there. But we can take a look at the advanced decline information for the New York Stock Exchange on multiple time frames. Here's the daily in the left, here's the center is the weekly, and then on the right-hand side is the monthly. And if you're going to go ahead and just take his carte blanche, like for your long-term accounts, what's the oscillator reading doing? And right now you can see it is above zero, which, by the way, is a good thing. And you can see that it's green, even in the face of what we have seen here. So I don't think he's making the call based upon, which would be a longer-term reading or that. Maybe it's based upon the weekly, which is negative at this stage. It's minus 105.27. You can look at the summation line on the bottom, just see that it is red out there. I and newsletter subscribers know that as the market made its highs several days ago, this is back on April the 18th, that what I personally was looking at were a couple different things. One, that we got the advanced decline oscillator reading up to a level of 151. It was 151.30. What's really important, it's the first time we've been above 150 in quite some time. Not we, but the New York Stock Exchange advanced decline oscillator reading. A lot of times, most times, if you get above 150, and you need to see follow through on the next session here, what it does is it promises you that you are going to see higher prices in the future. That's the read. That is Sherman's interpretation of it, and I have found by going back and looking at it that that is a good interpretation. We also had on the very next day the advanced decline line for the New York Stock Exchange hit a brand new all-time high, and Tom knows as well as I do that with the exception of one time in its history, that is not, that also tells you that 2 or 3 months out from now, you're going to see, or you should see, higher highs in the market. The markets don't end with the advanced decline line at a new all-time high. There was one instance that a listener was able to point out to me. So now I can't say it's 100%. I can only say it's like 99% accurate out here. So what we had here was a what I like to call plus 150 failure. That price started to turn down. So now the key is going to be for the New York Stock Exchange was yesterday basically the turn down, because if you close above zero, you're minus 22 right now. Just means it needs more net advancing issues out there. Then it is buyers that could be in control of the market yet once again. I think what Tom was really referring to out here, and it's something to be cautious about. It's something that you and I look at all the time. I'm just going to show it on this chart here, my E-signal chart. It's a price oscillator. Price oscillator different than an advanced decline oscillator, because this is just taking a look at price activity. And as we take a look at it, you can see that it is below zero. So the reason that we take a look at this is because when it's below zero, that is bearish. Now, what you and I like to look at is we like to look at price and the price oscillator and Stevie's red. Oh, did I really just? I can't believe I did that. Oh, I think I hit the wrong button, and I literally just went ahead and deleted the chart. Let me just try real quickly here, see if I can find it. Son of a gun. I either made it small. Let me see here real quickly. Does this do it? Did that pull it up? Yeah, there we go. Whew. Okay, so here we go. That was a critical pause. Now, if we take a look at this chart here for the S&P 500, you'll see that the price oscillator is below zero. Stevie's red line, when price is above it, tells us that the price oscillator is rising, even though it's below zero. I bet you that Tom would be saying, now we could see more bounce here at a minimum. What Tom would be looking for is to say, and he would call that call off, I would think. I'm not here speaking for him. But if the price oscillator gets above zero and is rising, there's no way, there's absolutely no way that he or anybody else are going to call it a bearish market out there, because there's nothing more bullish than a rising price oscillator above zero. There's nothing more bearish than a falling price oscillator below zero. As of 1:22 in the afternoon right now, it has to be more of a neutral call, because what you have is a rising price oscillator that is below zero. Says more retracement. Says that price inside the S&P 500 is going to go at least, or should at least, go target its prior swing point out here from just a few days ago, 2, 4, 5, 6 days ago. That becomes the target. If price takes that out, then you're looking at an A to B equals CD to the upside. Do I know which one is going to happen? No. What we do is we take a look at what's the information that the market provides to us today. We make decisions upon it, and we anticipate what the market is going to do. I can tell you, when you come off of a C point of an A to B equals CD, which is what we have potentially done right now, what you're looking for is some type of explosive move. That is what we actually have going on right now today. Explosive, is it explosive as the downdraft from 2 days ago? No, but you have a gap to the upside, right? And you have it's a morning star pattern as we speak right now. You're above Stevie's red line out here. So I'm not going to talk about what's ahead for the months. Now, there's probably one other thing that's influencing Tom, and it is something in my background. It's something I've talked to a few other people about, and we'll take a look at that. But right now, I'm going to just get back to the S&P 500. There should be more counter-trend rally left in this move out here as we speak. And from an A to B equals CD pattern, you don't want to see little itsy-bitsy bodies of candles. You want to see something with conviction exploding off of that level out there. And that's the candle formation that you have today. So what else is it that he or anyone, myself, everybody, maybe wants to take a look at to say, if you have a falling price oscillator below zero, what's kind of like the sentiment of the market typically this time of the year? It is not the sell in May, although there's probably an influencing factor, but more so what likely is in play here is this chart. And this chart, we're going to go ahead and put this into the screen from the current slide. And this is, as you know, you don't need me to tell you this, this is a midterm election year. And this here, this data, this is for the Dow, by the way. It doesn't really matter, but it's for the Dow. This goes back since 1934, I believe, is when I put this data in here. We could go back further, but this here shows you what the average price movement of the Dow is since 1934. It's right in front of me. Geez Louise, just read your screen, Steve-O. So since 1934, you can figure out how many midterm elections there are. So since that time period, this shows what the average price movement is. Now, this shows that the market or the Dow makes its normal bottom towards the end of January, early February, moves higher into April 19th. We're April 26th out here. And so the influence of the market typically this time of year is for the market to move lower. Now, the email said into August. The pattern here since 1934 would say you go down into the Santa Claus rally time frame, which is into October. I would think that this chart would influence me if you really had this price oscillator in the S&P 500, as an example, just simply continues to fall. So what else is of concern out here? It's liquidity. This market is always about liquidity. You and I take a look at the VIX index, and if we take a look at the VIX index out here, a couple of days ago, you saw that one-day rate of change that was over 10%. It was 10.28% to be exact. And you know, because you have been teaching me, you've said to me so many times, Steve, if you see a one-day rate of change greater than 10%, please don't short the market. You're going to see a bounce or a bottom. Man, you certainly got the bounce. Maybe even the bottom. We need more liquidity. So what are high-yield bonds doing? That's the question that we have to go answer. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome Welcome back, folks. You know, one thing that I did mention on this S&P 500 chart, and the reason why it's important, reason why you and I take a look at that price oscillator, and it's on each of my charts when we are trading, when we're taking a look at something, is because of its influence and its power. Now, it's not going to pick the top tick, it's not going to pick the bottom tick, but you really want to understand, you know, where the influencing factors are and try to trade within them. I've taken here, and I've created some yellow squares, rectangles, boxes, to take out periods of time when that advanced decline, the price oscillator, when it was below the zero line. So we can see this here back in 2015, 2016. You can see how the market just simply from the 2016 time continued higher. And if you just look at that price oscillator, you know, always above zero, it didn't mean we weren't having some jiggling, so to speak, out here, but just simply above zero. And you saw the type of rally. Now we're in this market where we've got really a wide trading range out here, and we can see that we've got this price oscillator below zero. If we go back into the 2008 timeframe, 2007, 2008, just to look at what was going on back there, and it's a reason to certainly pay attention to it, is, again, doesn't call the top, but the price oscillator went below zero on November 9, 2007. Remember, the top wasn't that many days earlier, October the 12th, 2017. And the price oscillator remained below zero up until the trading day of, what day was it? April 10th, 2008. You saw a bit of a rally. And then it dipped down below zero again on the trading day. This is going back to 2007, 2008. This is 2008. Dips back below zero on June the 11th, right? So it is absolutely worthwhile to pay attention to. Now, what's also important to this market is liquidity. And here is a chart. We've talked about this before. It's a high-yield income bond fund. There are others that are out there. This one's been around for a long time. There are periods of time where the divergence, in this case here, there was divergence. You saw liquidity dry up. This is back in 2013. You can see how it was moving down, but yet the S&P 500 still managed to move higher out here. It's been working really well since 2016, and you can see that. And what's interesting is people think that, hey, if you're going to invest money in the markets, the stock market, you're not going to go invest them in bonds, right? Wrong. That is like the worst fallacy that is out here. You're going to invest in bonds because of different reasons, separate reasons, and with regard to what the S&P 500 is doing. And that is proven here, certainly with inside this chart. And take a look at this ETF, AWF out here. What's best, actually, is when there's plenty of liquidity to fund everything. When there isn't plenty of liquidity, such as this high-income fund has been going down since October since October 2017 out here. You can see the steady decline. You'll see that bottoms that the market makes out here, that it's simultaneous with regard to the bottoms inside the S&P 500. If you take a look at what went on February the 8th out here with regard to the S&P, the following day on February 9th, what you saw was you saw the AWF tick up and move to the upside out here. So it really moves lockstep. If we take a look at the bottom, in essence, yesterday on a closing basis inside the S&P 500, you're seeing money flow into the AWF as well out here. So this is something that you also want to go ahead and pay attention to. So, you know, I hope that kind of answers it. Do I pay attention to it? Yeah. Do I have a different view at this stage than Tom? Yeah. Does that mean he's right, I'm wrong, I'm right, he's wrong? No. Just means we have a different view. And Tom's an extraordinary technician in the market. Extraordinary, amazing sets of tools that he has. You know, the Timer Digest, their issue that was April 20th, so it was as of last Friday, came out on Tuesday, I believe, of this week, April 23rd, was out. You'll see that I've been able to maintain, again, for the last 12 months. This now would be April 20th through the 20th of 18. Last 12, last 6, last 3. You don't see Tom's name in here on the top 10. That doesn't mean, and he's not out there. But where his name is if you go take a look at what they call the long term. Here's the top 10 long-term timers. And you will not see my name anywhere here. And you know why? because there you need 24 months worth of data. They only have 13 months worth of data for me now. So we'll just have to see. And if you take a look at what these readings mean here, just to put it in perspective, the index, the S&P would be an index reading of 100, and I'm at 129.07. It says I'm outperforming the S&P 500 for the last 12 months, for the last 6 months, for the last 3 months as well, with regard to those market calls for your long-term, intermediate-term type portfolios out there, and still maintain, by the way, the #1 gold timer reading out here, although it's getting neck and neck between myself and Steve Todd, who has you see everybody else here is bearish. I'm the only one that is bullish of that group of top 5 inside of gold. So I need gold to pick it up here. I'm not changing my view with regard to gold, not at this stage here. I don't see the bearish call on gold, other than maybe day to day, but these are not signals where I'm changing necessarily day to day. Okay, so that should hopefully that answers the question, do I believe in it, which was really the question. The answer is absolutely. We use price oscillators and advanced decline oscillator readings all the time. It's not the most influencing factor. To me, the most influencing factor is trying to find a time frame in the market that's giving us the best signals. Because if you can do that, then you have uncorked, a beautiful bottle of Cabernet or whatever it is, or sake, or whatever it is that you like to drink out there. And because unlocking what the markets are doing and finding the pulse that you can rely upon, it is a very cool thing. I will share with you the chart and the time frame that has provided the single best top and bottom signals since January. Yeah, since January, since the market high, well, January 26th. You'll see the red arrows out there. Now, this is a pattern that I've taught subscribers, the details of which, exactly the 5 steps, exactly what to do, exactly what to look for. It's on their members page. If you're not a subscriber, you can become a subscriber. You can find the exact this exact pattern as well. This, by the way, you'll see it says 300 minutes in the upper left-hand corner. It's a 5-hour chart out here. When the market made its bottom yesterday, and I will tell you, subscribers and I did not catch the short trade, even though it did give us a signal. I told you, I apologize, because I didn't catch it until the day after out here, and I'm not a real big chaser of things. I'd rather say the market complete a pattern, which, by the way, it did yesterday. So when the newsletter went out at 7 o'clock in the morning, whatever time it was, I said we're not going to the short side, because here's what we're going to anticipate. This looks like the pattern that is forming inside of the NQ. And by the way, it's the NQ that is the single best time frame chart right now on a 5-hour basis that is giving you the signals, not the ES. And I've got them all. If you saw my screens right here, you'd see the Russell, you'd see the Dow, you'd see the ES Mini. And so that way I can always pay attention to, hey, what's going on? This created that same bottoming pattern yesterday. Yeah, the same one that is called other bottoms and other tops out there. How valuable is that? I'd say pretty valuable. We should get more of a move. It may be just a bounce. You might say to where, and I could answer that question for you too, but you would have to put more nickels in the machine. I'm just kidding. I will give you the information. I am not the guy to withhold anything. Just doesn't make sense. Life is way too short to do that. Even if I show you this pattern, it works on all kinds of instruments, all kinds of time frames. You can't put me out of business. It's too much to trade. We'll be right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. So we were talking about the NQ, really, and, hey, where might price be headed to? So my initial price target is 67.32. We're at 66.57. So what is that, about another 60, 40, 72 points or so. We'll know here relatively soon, not within the next 15 minutes or so. But here, if we take a look at a short-term chart, this, by the way, that you're looking at 30-minute charts in the black background, you're going to look at a 30-minute chart here on the white background. And what you're going to see coming off of yesterday's low on a 30-minute time frame chart, you're going to see that we are in wave 7. In wave 7. So now that's going to continue, just simply continues with higher highs coming at us. But it could be a point where there is there's a turn. So when we confirm that 7th wave move out here, it could get a little bit rocky. Is it the A to B equals CD that price is going to complete, which takes you up to 67.42? What was the number I actually gave you? I didn't give you 67.42. I gave you 67.32. So that would be the range of where price ought to head to. Well, we can see price here right now has been moving higher, doing less relative energy. If we got a big old bearish candle, we close below Stevie's red line, 66.42 as we speak right now, that would be short term. That would be short-term bearish, and we would start to see some type of pullback. We don't have that right now, but we know what to look for. That's the beautiful thing, because these patterns repeat on multiple time frames. It's the 5-hour time frame, which is the one that I'm relying upon for the larger signal, by the way, not the 30-minute. But at least this way, you know, how many of you step into a car these days and how many of you step into a car and don't use something like, what is it called, Waze or Craze? See, I don't use that one. Not that it's on my phone, I just haven't used it, or some type of GPS. For me, it's just easy to use the CarPlay one and the Google Maps one, right? Because it tells you when there's traffic or a potential accident and so forth. Well, an accident, a short-term chart, would be some type of bearish reversal candle forming out here. And, you know, and you got to get through that traffic, and then finally, boom, you're on your expressway and you're off to your final destination. Again, I think the final destination at this stage, 67.42 to 67.32. I will change my mind in a heartbeat when that information gets presented to us, but it has not been presented to you and I just yet. Whew. Well, there you go. Now you got the whole kit and caboodle. With regard to the caboodles, we've got someone, Ruby, wants to take a look at palladium. Can we look at palladium? Been in and out for now long again. Long for palladium. Well, let's go see if we can help Ruby out and figure out what palladium is doing. And we'll do that just simply by taking a look at the market profiles out here. So we've got 4 of them, 60. It's got 120. Let's go ahead and change that to 240 if we can. Let's go ahead and populate that. And what you'll see here in both of those cases, you basically have green shoots. Now we'll say, Ruby, expect a bit of chunky consolidation at this stage here. You've got support at 974.05. That's on a daily time. I'm sorry, that's on a 60-minute time frame. It's a bullish structured box. It just formed here at about 1 o'clock. So it is a new profile. It's bullish in structure. Resistance 984.89. Once you take that out, then price ought to head up towards the 1,003.25 level. You're back inside the daily box. That's the panel that is second. On the very right-hand side, it's second from the second to the left from the right-hand side. That's a lot. Somebody, well, you might have just gotten dizzy out there. Here we go. There's the daily. Now you see it, and now you don't. No, I'm just kidding. You see it. So you got 958.75 support ultimately there. 1,000, the 1,003 levels where daily buyers and sellers are most comfortable with price. It looks to me like that's where price is gravitating up towards. I don't know what it's going to do there. The box itself is slightly bearish in structure, not enough to write home about. The weekly says 1,009. So I would pay attention to 1,009.40 as a real level of resistance out here. I don't know how long you're in or out of this trade, but palladium ought to, once it clears 984, if it can, then you're up to 1,003, and the real level 1,009. If you get above that, then you got 1036. You're back up to the recent swing point from the trading day of April the 19th. So I hope, Ruby, that that sweet Ruby Thursday, I hope that that helps you out there. So I don't see any fingers that have been doing the walking. Very quiet out there. Why is that? And I don't see anything else inside the Tiger's Den. So what should we go look at out here? What should we go look at out here? Let me just hit this main page. Maybe we'll go take a look at some individual equities. Let's go take a look. Yeah, let's look at some individual. I've got Facebook up on my screen. Why don't we go take a look at Facebook? Let's go ahead and get some volume metrics added to this chart here. So just give me a moment to do that. Someone, Danny, wants to take a look at the euro. So let's just finish off taking a look at Facebook, get a feel for where it's headed to. Now, you know, and I know that gaps are our friends out here. And if we take a look at the, what are we going to use here? Let's use a red line. Let's use a red line. So what Facebook is trading into is it's a gap from the trading day, by the way, of March the 19th. Now, volume there was 88 million shares. Today, you're, wow, son of a gun. Talk about volume inside of Facebook. It's 148 and you're 61 million shares. That's going to blow away the downdraft of 88 million. So it's pushing. That says to me, Facebook headed back to its highs, at least 183.41. It hasn't made it up there, but man, that is that's a big push. That's a push. That is a push out there. And that is one heck of a wide-ranging bar, right? So you have to fill in the gap. You've got to color that in. And that is the, that's a wide, looks like a wider gap than the gap to the downside. So Facebook looks like at this stage here, it's out of the woods. Truly out of the woods. Let's go take a look at the euro. And let's do this here. Danny, what time frame is it? What are you looking for in the euro? Just kind of give me a little of an assist out there. And but in any event, I'm just going to put this euro chart out here. Daily bottom is what Danny is looking for. So what I got to do out here, just give me a moment. Let me change to a different screen. Let me see, you know, when we look at this chart here, Danny, you can see where this thing broke out, the euro being, I say this thing, January 11th and January 12th. Those were some wide-ranging bars out there. So in we take a look at currency pairs, folks, we don't have volume that we can rely upon. So what we really have to do is then become a real expert at being able to read the tea leaves of the Japanese candlesticks out there. And that is a beautiful thing. Now, what I'm trying to do here, that's kind of like a strategic pause and see if I can do two things at one time. And, of course, you know the answer to that. Yeah, it's really not that good at doing two things at one time. But what we're looking at is for any type of pattern, I'm actually trying to draw it in while I am, because, Danny, you're looking for a bottom, right? You're looking for a bottom inside of the euro. And the only thing that I can say at this stage here is this. Let's take a look at this right here, this chart. Now that we've got it populated. The concern about the euro finding a bottom was really kind of so we began the show by taking a look at the price oscillator. What you can see now, Danny, I'm looking at the futures contract for the euro. That way I don't have a delay out here. And you see how right now we are below zero. It has a falling price oscillator below zero. Maybe price catches up and tags Stevie's red line. That's really the test you have to look at. It looks to be more likely this is at least fulfilling an A to B equals CD to the downside. And that's going to give you a price projection somewhere where you've got the one-to-one right now. I don't think this is it. I don't think this is it just yet, Danny. Keep your powder dry. Steve Rhodes with TFNN. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's TigerTV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back back, folks. I love that power trading hour. And Danny, hey, Danny, you can't go long the euro, not just yet. You don't have anything. Well, I can't say anything, but I'm looking at the 30-minute time frame chart here, just in going down to a shorter time frame to see if there's some type of bottoming signal, knowing that you got that one-to-one price move. Remember, only 60% of A to B equals CD patterns make a one-to-one. So don't ever buy into the theory that just because that's your price target, that's a price projection, that is where price is going to stop. If at least we could see price close above a 30-minute profile, then you could say, okay, maybe. But we haven't seen that. 1.21759 would be the number where price should have to close above. I think instead, your better trade opportunity is going to be in the 119, 1.19867, and 1.20604. That's the bottom of the daily and the center of the daily, which is a bullish structured. That is where the euro ought to find some support. We had a request to go take a look at silver as well. If we take a look at silver, again, what do we see in silver out here? You know, silver, if it's going to find a bottom, it needs to get above 1652. Otherwise 1618 is written in the cards for silver. That's looking at both just the daily and the weekly time frames in order to give you a feel about what that is. I had another question that came in. We're doing just a quick round here. Visa. Is Visa the type of pattern where price ends up going higher with less relative energy to form a top? And the answer is no, it does not. And it's a long way away from that occurring out here. And the reason was because of the decline that Visa had from January 29th down to the slow out here. In essence, that set of patterns that Stevie has would have recycled, and it has to start a whole new thing. And the relative strength index is not at all near. Well, I can show you where it's at. I can just move this up here, and it's only a 61.64. So yeah, so that's no, it's just testing its all-time high. I don't know what kind of volume is inside of it. Let's see if I can do this really quickly. I don't know if I've got the time. Visa V. Let's put it in here and see what it's doing. How's it doing with that test? 6.2 million. Oh. It looks like Visa is trying to, if it can close above today, 126.88, that's 8 cents away. You've got a huge A to B equals CD to the upside. Yeah, I don't see a top in place for Visa. Folks, thanks for being here. Stay tuned. David White's up next. Tom O'Brien, 3 to 5. See you later.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. No matter what kind of trader you